Good morning, everybody. Welcome to the trade setup right here on BloombergQuint Live. Amongst key news before we get to the Indian markets and IT earnings, US inflation numbers hit the 7% mark. That is high. That is the highest number that we've seen in 39 years. That is quite stunning, really. So keep that in mind. The Indian CPI inflation number for December rose to about 5.59% as well, highest since July 2021. What is also a bit disconcerting is that India November IIP is down now at about 4% on a month-on-month basis. And the problem is that we could probably see further weakening of the growth momentum due to Omicron and supply disruptions. The economic indicators are pointing towards some bit of stimulation required. The question is, can the budget deliver the goodies? I think everybody's eyes will be out that. So US inflation numbers, India CPI, India IIP, a lot of macro data to contend with for the markets today, but they may well take heart from their pure equity indicators, which is the IT earnings, and we'll get to that in a moment. By the way, there's this chart on the Bloomberg terminal, I don't know if I can pull it up, but which shows how US inflation in the 39 years, just to understand how big that timeline is, the big spike that came in for the latest release data compared to what has ever been in the US. This is, look at it, this hottest in decades. Inflation is real, and that tells you a story or two about what's happening in the US and whether this will persistently run high. Even if people believe that the Fed can pull out a rabbit out of its hat, can these numbers ensure that the belief of the markets would be that the Fed would hike rates and hike rates in a jiffy? The question is only whether that will disrupt the markets too strongly or no. Remains to be seen. Well, even after these numbers, by the way, just pull up the US markets and show you what they did overnight. Pull up Asia and pull up Sdx Nifty to just give a sense of which way the wind is blowing when it comes to equity sentiment. So the US markets did okay. No big complaints really. You could have argued that they moved, but that's what equity markets move to intraday, right? They move. So they moved and they recovered a little bit. So a flattish performance, if you will. What is Asia up to this morning and what is Sdx Nifty up to this morning? That's the other key factor. And remember, what will determine Sdx Nifty would be the performance of the Infi and the TCS and the Wipros of the world. So let's pull up any of the charts. We can just pull up the Sdx Nifty, if you will. Okay, this is Asia, which is showing a flattish performance, a mixed bag, but largely flattish. Now the Sdx Nifty, would it be up about 0.25% to 0.5%? So give or take about 100 odd points. Could well be, considering the fact that we will have the IT biggies start off reasonably okay. The question is, can we pick up from there and move higher, or will we stay stable? So about 140 odd points, so it's slightly better than what I anticipated, are the cues for the Indian markets. But now we are very, very close to slightly troubled areas, right? Hitting the peak, so to say, and therefore, could there be caution warranted? I think that's the question that everybody would be asking. Just very quickly, before we get to the trade setup, the MOE function, just to show you how trade has been in yesterday's session as well. And then you can think back to what had happened the last few days and try and figure out what the trends are indicating. Usually we try to gauge what the market breadth was, which was positive, 330 advances to 166 declines. So the momentum was very strong. And again, a bunch of very varied names did well, right? So there is a Sheela Foam, which did well. Sequence Scientific, I think, on the acquisition, up about 12%. Venki suddenly went up about 10 odd percent. Graphite India and HEG had a recent outing. The likes of Varroc Engineering and Nelcast did okay. IndiaMart Intermesh bounced back. Tata Com did okay. So varied names did really well. There were a few of the high flyers which came off, the likes of Greaves Cotton, which has had such a stunning move that yes, okay, it can come off a bit. Alok Industries, stunning move, and yes, it can come off a little bit. But largely, and some of the textile names, but largely that they belong to the gainers. Now, what's the trade setup for the day, therefore? I mean, like I said, I think any risk reward indicator you look at, it'll be pointing towards the risk rewards not in favor of leverage loans, but the momentum is just very, very strong. I really think it's bordering on the risky end, but who's to argue? The Nifty IT momentum has continuous triggers in the form of results over the next 8 sessions. Now, can Nifty IT correct post today's peak? Sure, it could, but the point I'm trying to make is with HCL Tech numbers due to come out Friday, and they are expected to be good as well. So that will be not as large a trigger as Infi, TCS, Wipro combined, obviously, But HCL Tech in Mindtree today and HCL Tech tomorrow. Then we have LTI, then we have LTTS. Yeah, so earnings today include a Mindtree, and we'll get to the others. But the point I'm trying to make is of IT earnings, and let's stick with the trades that I've played. So Mindtree, HCL Tech, LT Infotech, Persistent System, Emphasis, a bunch of companies which are expected to deliver good results are lined up over the next few days. So watch out for IT. The mood could be decent. Metals could be a dark horse, and watch out for that today, tomorrow. I think the overnight some Chinese prices were also doing okay. You never know, metal companies could have a bit of a pullback move, and dealers suggest that dips in real estate should be bought into. So if there are dips, go out and buy is what dealing rooms seem to be suggesting. Let's wait and watch if it turns out to be true. FI action wasn't the most optimistic, so they sold a little bit in the session yesterday, about 1,000 odd crores if I'm not wrong, and DI is bought about 1,332 crores. But then that brings us squarely to stocks that should one monitor today, and it's a long list. I'll quite kind of quickly go through. First, our earnings, of course, as Virat had shown earlier: Mindtree, CSC, Tata Metallics, GTPL, Hathway. Nothing big, but I think Mindtree should keep the activity boards up and about. Then on to the numbers. I'll first tell you what brokerages are saying about each of the three biggies. Then I'll give you a bit of an assessment of how I've read into it. So first, Infosys, and the numbers were blowout. I'm bringing the brokerage view, which I thought best described the numbers. So Morgan Stanley on Infosys, rating is overweight. The target price has been raised. I'm not surprised. Most brokerages would do that. They have raised the EPS estimates by up to 3%, has Morgan Stanley, because they believe that revenue growth surprised the most amongst the peers. Margin pressures incrementally appear to be easing, while commentary point towards higher momentum, continued momentum in FY23. Given solid Q3 numbers, Morgan Stanley believes that the stock should further close the valuation gap with TCS. And this is the general consensus view now, that TCS should not trade at a premium to Infosys. Let's wait and watch. Speaking of that, TCS, of course, the buyback is that big cushion, and there are multiple ways to play this. I won't get into those details really. A lot of people say that if you buy between 1 share and 45 shares, that you're in that retail category, arguably, and you can tender the shares for the buyback at a price of 4,500. So is that great? Maybe it is. But the results-based view, UBS view, I thought was the most balanced one. They say neutral with the target price of 4,180. They're saying that the revenue is beaten estimates, but the margin miss offsets any earnings upsides. And they say while TCS's revenue beat is a positive, they expect markets to favor Infosys, as the latter is likely to enter FY23 with better business momentum. And that is very key, viewers, because FY23 will have to contend with the high base of FY22. And therefore, you need the business momentum to be very strong. Let's wait and watch if TCS Q4 does that. For now, Infy seems to be chalking a bit apart. Wipro, but TCS has that buyback trigger, so keep in mind it will also rise. Wipro, Morgan Stanley's come out with their note on Wipro being equal weight. Now, this is important. Why? And we'll get to the ADR plates of all the three names, but Morgan Stanley note on Wipro, equal weight with the target price of 775. They're saying it's a miss on revenue, but no slowdown in business. Given strong performance in the last 12 months, they would expect the valuation discount to increase near term, and any sharp sell-off, which could be possible today, but any sharp sell-off should be looked upon constructively given business momentum remains strong. Now, why do I say that? There could be a bit of a pullback, because if you just looked at the ADR performances, you actually don't need me or any of the brokerages to tell you how the market is going to value these names, because Infy did really well and Wipro actually cracked quite significantly in trade yesterday. So you probably have like that shows you, right? Infy, TCS, Wipro, it shows you what the market is likely to behave when it comes to these names. So let's wait and watch. Infy will start off well. Wipro will start off lower. Is there a trade in any of these? Possible, remains to be seen. Now, just very quick synopsis of how I think about these. Infy was the best results of the three, right? Better than anticipated top line, big upgrade in guidance to 19.5 to 20% from 16.5 to 17.5% YOY, which is great. So constant currency growth blew all expectations. Demand environment is strong. Continued pace of hiring, attrition flattening. You couldn't find a fault line with Infosys. TCS, because margins and PAT both could be better, That's the problem. The good part, though, was that the strong employee addition of 28K employees indicates the management confidence, and they see management is super upbeat. And in Wipro, while there were a lot of chinks in the armor, the net employee addition has been strong at about 10,000 employees. The commentary was upbeat. Attrition is stabilized, expected to moderate next quarter. I think this is a big shift, a big plus for IT companies. If attrition stabilizes and if they can roll in better pricing in order to contend with cost pressures, you might actually see these companies continue to do well and stay stable on the valuation front the next few. If anybody tells you short IT, I think that call should be taken with a pinch of salt, simply because the demand environment continues to be rock solid. The other one in focus could be Tata Motors. The retail numbers seemed a bit to be desired. I mean, the sales declined about 13.6% quarter on quarter, but the wholesale numbers were okay. The big thing was that JLR's initial estimated cash flow for the quarter is about 150 million pounds. This should be viewed constructively. CLSA doesn't. They maintain their sell rating with the target price of circa 400, 405 or something. But I think the cash flow at about 150 million pounds is actually a decent one. So let's wait and watch what Tata Motors does today. Motherson Sumi and Alert. Keep in mind all existing contracts, which is contracts with expiry dates of Jan 27th as well as Feb 24 and March 31st shall expire today. So keep an eye out for this one. There was other bit about how oil continues to do well, and I think that up move out there continues. You've got to be careful about what happens to crude oil and crude oil sensitives. So the likes of Oil India, ONGC, and JP Morgan came out with a big upgrade on ONGC yesterday. So that's something you want to watch out for. But just the fact that any crude beneficiary could do decent. Any company, any set of companies which get impacted by higher crude prices, you're going to watch out for them, because crude is certainly an uptrend. With all that's happening around it, crude is certainly an uptrend. So let's wait and watch. By the way, before we wrap up this piece, and there was a brokerage, there was an initiating coverage by Motilal Oswal, sorry, on a GR infra project. So that is something that maybe people would want to watch out for. So keep an eye out for that as well. So those are a few things, viewers, that I thought everybody should keep an eye out for. Lastly, before we wrap up, just what stood out for me was the fact that while we keep on talking about outflows in general, but here's what is expected. There's a Bloomberg story which said that Saudi Arabia's sovereign wealth fund is planning to plow deeper into public markets by investing about $10 billion more in listed stocks. This is source-based information from Bloomberg. And they believe the key is, you might wonder, what if they buy into Saudi Arabia stocks, what if? But that market, I don't think, is so strong and so deep that they could take $10 billion of inflows so easily. But the public investment fund is looking to buy into global stocks based on a thematic strategy that focuses on e-commerce and renewables. I dare say India is right in the mix of things when it comes to both e-commerce and renewables. So you never know. The money that comes in from sovereign wealth funds, including Saudi Arabia, including Norwegian wealth fund, because oil riches would be good for them as well, if they come about, that is, could all over well for equities in general. So let's hope equities do have some hope. Thanks so much for tuning in today. Have a safe, profitable day ahead. And if you're stepping out, viewers, please stay masked up. In Mumbai as well, the cases have perked up after the dip. So all is not done as yet with Omicron. We got to be careful. Thanks so much for tuning in today. Stay safe.